Students, you're welcome to today's accounting class. In today's class, we're going to treat a topic, the accounting treatment for closing stocks. At the end of the lecture, the students should be able to understand the meaning of closing stock. 2, how to treat closing stock in the financial statements. And 3, why closing stock are not included in the trial balance. In the previous class, we gave you assignment to find out why closing stock are not included in the trial balance. We're going to address that issue in this class also, because we're treating closing stock. First of all, let's define closing stock. Closing stock simply means the unsold stock or the unsold goods at the end of the financial period. If the financial period starts from January 1st and ends on 31st December each year, or each financial year that makes up 12 calendar months, the part of the goods for resale to make money in the business that remain unsold at end of 31st December for the particular year or for the financial year is known as what? Closing stock. In other way, we can call closing stock as unsold goods. Unsold goods, or goods that remains unsold at end of each financial year. That's the meaning of closing stock. Now, having defined that, we can now move on to the accounting treatment for closing stock in the account. How will you treat closing stock in the account? First of all, the account treatment for the closing stock is that the closing stock is deducted from the cost of goods available for sale at the trading account. Take it again. We say that closing stock is deducted from the cost of goods available for sale at the trading account. When the closing stock are deducted from cost of goods available for sale, you now have what? The cost of goods sold. Now, when you deduct it or less it from the trading account, from the cost of goods available for sale, what next will you do? Now listen to the next step. The next step is that stock of closing stock does not enter profit and loss account. It will only enter trading account so that it will be deducted there. When you deduct it in the trading account to have the cost of goods sold, then it remains there till you now move to the profit and loss account, but it does not enter there. The closing stock does not enter into profit and loss account. When you're through with the profit and loss account, you move to the what? Statement of financial position or balance sheets. You know, balance sheets are divided into four stages or classes or kinds. 1, the current there's the current liabilities and the capital side, and the other side we have the fixed assets, and the other side we have the what? Current assets. In other way, we say that statement of financial position is divided into 4, or you can call it balance sheets, the old name. In this balance sheet, that is where the closing stock comes in. That closing stock you deducted or less from the cost of goods available for sale. That is, when you less it, they have cost of goods sold. That one you less there is known as what? The closing stock. Now you now move it to what? To the what? Balance sheet. At the balance sheet level, we have the current asset side. Under current asset, we have the stock. That stock that will enter there under current assets, under current asset column, that's closing stock that will enter there is the closing stock you deducted from the cost of goods available for sale. That closing stock simply means unsold stock for end of that particular period. Because you deducted it there, it will not end there. You now take it to what? To the balance sheet. And you now add it under current liability, under current asset. Please, not current liability, but current asset. That's where you add it under what? Stock or stock balance. You add it there to get the what? Value of the current assets. Thank you. That is that's there's account treatment for the closing stock. Now we now ask ourselves in our previous questions, why is the closing stock not entered in the trial balance? Now I know many people have tried these questions. Okay, now let us look at why it does not enter into trial balance. Because when a goods is purchased, you add the goods purchased to the what? You add the goods purchased to the what? Opening stock. You add it to the opening stock. Then after adding to the opening stock, you now add carriage inward to the cost of goods purchased. You add carriage inward. After adding carriage inward, you now less return outward. Return outward simply means the cost of goods returned to the supplier from the purchases. So because there is a part of the goods you return to the supplier, either because of wrong distribution, you less it from the what? Cost of goods, you less it from the what? Purchases. Then when you less it, you add carriage inward, you now have cost of goods available for sale. Then when you already have cost of goods available for sale, then all these items I listed now enters into the trial balance, like the opening stock of goods, the purchases, the carriage inward, there's a carriage inward and the return outward. All those items entered into the what? Trial balance. If you now come and enter the unsold stock at the end of the period into the trial balance, it will be a duplication of purchases. It will be wrong. That is why it is not entered there. So it will be shown at the end of the trial balance. It will be shown as a additional information. That's how it is shown. It does not enter into the trial balance, because if you do that, it becomes a duplication of purchases. So thank you and God bless.